Hi, my name is Father Max Baina, and I'm the pastor here at St. Margaret Mary Parish. As many of you know, we are entirely dependent upon the generosity of our good people in order to keep our parish going. The financial contributions and donations that we receive support all of our parish operations, including covering utilities. It covers staff salaries, things like repairs. It supports our ministries, and also helps to keep things updated, just to name a few of our basic needs. Traditionally, the common way to give is through the Sunday collection, but the Stewardship Committee and I have produced this video in order to help you identify some other ways of giving. These ways include a qualified charitable distributions from your IRAs or appreciated assets, just to name a couple. We hope you'll find this video enlightening and informative, and we want you to know if you have any questions or if you would like to discuss more some of the things that we'll cover in this video, please don't hesitate to reach out to our Stewardship Committee. Thank you for all the ways you already support our parish, and I pray that God bless you and your families.
Thank you, Father Max, for that introduction to this presentation. My name is Bob Presnak. I'm a member of St. Margaret Mary's Stewardship Committee, as well as our Pastoral Council, and have been one of the original members of St. Margaret Mary Parish. For my wife, Colette, and I, being a part of this parish has been a wonderful experience. Our parish has been blessed with so many generous individuals and families who serve in our ministries and support our parish. Thanks to you all. During our annual appeal, I'd like to invite all parishioners to join in the support of our parish. Our Stewardship Committee was formed about 5 years ago with the goal of leading our annual appeals and of communicating new opportunities and concepts for charitable gifting to our parishioners. During our annual appeals, many of you had asked for more information on charitable giving strategies. There are some tax saving options and legacy and gifting options to support our parish that you can employ during our annual appeal. Our Stewardship Committee has asked Mike Citrick and Yashika Weeks of the DuPage Foundation to share their insights in some of these various year-end and planned giving strategies that St. Margaret Mary parishioners could consider in response to the parish's annual appeal, and also in making future gifts to the parish. The DuPage Foundation has been serving our community for many years as a resource on charitable giving. In addition to that role, the DuPage Foundation works with individuals, families, and businesses to meet their charitable giving goals. The foundation also makes grants to area not-for-profits and supports them in their endowment building. As I close, I want to emphasize a note that this information in this webinar is intended for informational purposes only and should not be construed or relied upon for legal or tax advice or taken as St. Margaret Mary's endorsement of the DuPage Foundation. We strongly encourage you to consult your tax attorney and advisors before making any charitable gifts. And with that introduction, I'd like to turn the presentation over to Mike and Yashika.
Thanks so much, Bob. Yashika and I are thrilled to be here, and we really appreciate that intro from Father Max as well. As you mentioned, my name is Mike Citrick. I'm Executive Vice President for Advancement here at DuPage Foundation, and I'm happy to be joined by my colleague, Yashika. Would you like to introduce yourself?
Yeah, thanks. Good morning, everybody. I am Yashika Weeks with DuPage Foundation. I am the Director of Gift Planning here.
So we'll jump in. I'm going to share my screen here and bring a slide up. So we'll get started with our presentation here. Before we really get into the heart of it, just give you all a quick overview of the topics we'll be covering today. We're going to start out with a little bit further background on DuPage Foundation. Yashika will discuss some smart strategies for outright gifts. I'll give a quick overview about donor advised funds and how they might be a potential vehicle that can help you. Yashika will talk about qualified charitable distributions for those of you who are seniors. And then we'll close things out by highlighting some of the different opportunities that you can use to create a charitable legacy. So for those of you who are unfamiliar with DuPage Foundation, we've been serving our community for more than 35 years, and we're DuPage County's philanthropic leader. We're based in Downers Grove, and we're a 501c3 public charity wholly focused on raising the quality of life throughout our community. You can really think of us as the engine that drives charitable giving throughout our community, and we do this in three ways: by helping people and organizations realize their unique charitable goals, providing impactful support to our community's not-for-profits, and fostering key partnerships to address critical issues affecting our community. Since our inception, we've granted more than $70 million on behalf of our community and beyond. We've also built up our assets under management to about $130 million. This consists of 365 funds that sustain our local not-for-profits and accomplish the objectives of our donors and other partners. So why do people typically come to work with the foundation? Generally, three reasons. They're in search of a trusted local partner to assist them with their philanthropy. They're looking to learn about local needs and opportunities and want to enlist the help of a knowledgeable expert. Or lastly, they don't want to really just be another account or client with a large institution. They want personalized quality service and to really be a part of a community. So as I mentioned, we consist of about 365 funds on behalf of the community here and our constituents. I won't spend a ton of time on these, but just want to give you all an understanding of the breadth of our work and the types of funds that we house here. First is our DuPage Forever Fund, which you can think of as a community chest. Think of the game Monopoly like that. We're really a permanent endowment here that generates annual income for us to make grants to respond to the changing needs of our community. Secondly, we have field of interest funds. These are permanent, semi-restricted endowments that support one or more areas in our community. So from helping seniors, feeding the hungry, supporting education, animal welfare, whatever your interest, you can devote money to a particular cause, and then that empowers the foundation here to respond to needs annually in those areas. We also manage donor advised funds. These are essentially charitable investment accounts that donors can recommend grants from on their timeline, and we'll discuss those in more detail soon. And then the last bucket is our agency and designated funds. These provide lasting endowed support to specific not-for-profit agencies, and they can either be established by the agencies themselves or by a donor. So the catalyst for our discussion today is the St. Mary Margaret's annual appeal. But we've also been asked to engage you in a broader discussion around philanthropy and opportunities for impact beyond annual donations. Charitable giving can be an incredibly powerful tool to support not only your house of worship, but your community and other favorite causes and charities. Some of you may already have a strong handle on what you wish to achieve with your giving and how you plan to go about it. And if you do, that's fantastic. But if you don't, that's fine too. And that's why there's organizations like the foundation around to assist you along with your other advisors. I won't spend a ton of time on this slide, but here's some important questions that may help you, your family, and your advisors, jumpstart your imaginations if you're considering, some of your charitable goals. These are great questions that we often use here when we're working with clients, and I'll just touch on a few of them. I think they're interesting. First would be, what personal beliefs factor into your giving? So, we're talking about benefiting the church today. Obviously, faith plays a role in philanthropy and people's giving. Secondly, what are your interests and passions? Are there other causes that you care about, things that you want to help make a difference for in your community or beyond? And then third, are there causes and charities like St. Margaret Mary that you support now and that you'd like to ensure that you continue to benefit after you're gone? There are ways to do that through planning through your estate. And then the last one's probably my favorite. Imagine if someone gave you $1 million that you had to donate. What would you do? These are great conversations, I think, that really stimulate thinking. The next piece I'll talk about are, what are some triggering events for philanthropy? Once you have an idea about what you might like to accomplish, it's important to be able to identify, when the triggering events occur, when are the best opportunities to really discuss charitable planning. And these are some of them here. Sometimes it's driven by the charity, the cause that you care about, if there's a need. This is the time of year now when St. Margaret Mary focuses on its annual appeal, so it's top of mind. Year-end tax planning, while not a major driver of philanthropy, it does affect the timing and the amounts people give. So It's a good time to be talking with your accountant about what makes sense for you and in your position, as well as with your financial advisors. Retirement planning, people look to factor that in. Estate planning, if you're working on your will or a trust, either establishing it for the first time or revisiting. When you do tune-ups, it's important to look at the different causes and organizations that you have represented to make sure that the folks that matter to you are taken care of, both loved ones and your charitable children. I've heard some attorneys use that phrase. Disposition of a long-term capital gain property. So if you're selling a vacation home or another major asset, a classic car, something, those are opportunities. If you get a receipt of a financial windfall, winning the lottery to getting a big bonus, sale of a company is another key time. There are some opportunities there to both maximize your benefits in terms of saving on taxes and also really doing some impactful things for charity. So those are the list of different things there. Yashika, do you want to jump ahead now and talk a little bit about some of the different types of assets available to make charitable gifts?
Sure, Mike, thank you. There are 4 types of assets that donors can use to support their various charities. They range from the simplest to the most complex, but please know that every asset has its own set of benefits. The simplest and most common gift of assets is cash, but cash is not always the most effective. There are also appreciated assets, such as marketable securities, commonly known as stocks, real estate, closely held business interests, and other non-traditional assets like artwork, collectibles, and even now crypto. And then we have retirement assets. Those include individual retirement accounts and IRA qualified charitable distributions. And finally, life insurance can be used to support charitable causes and organizations as a named beneficiary or by transfer or purchase of a policy. As I mentioned earlier, donating cash assets may not be the most effective for every donor. That's because of the different benefits that are associated with the different assets. Cash gifts to a 501c3 public charity allows for the deduction of up to 60% of an itemized donor's adjusted gross income with a 5-year carryover allowance. While gifts of long-term appreciated assets held for 1 year or more, like stocks and real estates we've referred to a couple of times, enables the donor to avoid paying capital gains tax, take an income tax deduction for the asset's fair market value, and deduct up to 30% of the donor's adjusted gross income, again, with the 5-year carry forward allowance. Mike?
Sure. So now you've heard about some of the different ways to give. I want to spend some time now talking about some other strategies. So one is gift bundling. The Tax Cuts and Jobs Act of 2017 significantly altered the landscape of charitable giving and how people file their taxes. We went from approximately 30% of the nation itemizing their taxes to less than 10%. So what if you're not among that 30% that's itemizing every year, but maybe you're close to being eligible? One strategy you can employ is gift bundling. So for example, if you're on the bubble between itemizing at the end of this year and taking the standard deduction, you may choose to give extra to charity this year to essentially front load your philanthropy and get over the hump and take advantage of itemizing. This can be a really effective strategy for you in your taxes that you might wish to consider. But while beneficial for you, this strategy can be a little feast or famine for charities that you love to support, particularly if you're going a couple of years in between doing this strategy. They may be trying to forecast their cash flow and might not always welcome a big gift this year and then nothing for the next couple. But so fortunately, there's an option to help smooth out that choppiness. And one of that strategy is called a donor advised fund. This is a new term to you. A donor advised fund is a wonderful tool. It's actually the fastest growing area of philanthropy and one of our most popular giving vehicles here at DuPage Foundation. They're offered by most community foundations as well as several of the larger institutional financial firms that you might be familiar with, and even some colleges and universities and hospitals now have them. And you really think of a donor advised fund like a charitable investment account. You make an initial tax-deductible gift to the host sponsor charity, like the foundation, and using cash or other appreciated assets, you make this gift and you open a fund then, which you or others can serve as advisors for. And you and your other advisors that you name can then recommend grants on your time frame to your favorite causes and charities. And this is a fantastic vehicle because you can use this to help smooth out that giving choppiness we were talking about earlier and help you streamline and track your philanthropy. It's also great because if you partner with organizations like us, we can help match your interests with needs in the community. So really great tool. So if 2022 ends up being a high income year for you, you could make a gift to establish a donor advised fund and again, get a tax deduction this year and then have those assets at your disposal to recommend grants from when you're ready. So Yashika, let's talk about another important one for our seniors.
Yes, that's right, Mike. Using qualified charitable distributions is an excellent way for donors to support their favorite charity or cause. We often call these gifts, the gifts made through qualified charitable distributions, the low-hanging fruit, because many donors don't realize they can use these assets for charitable purposes. So for donors who are 70 and a half years or older and have a qualified individual retirement account, all or a portion of their IRA assets can be used to support charity. The donor would make a direct gift to his or her favorite charity from their IRA, and in doing so, the distribution would not be recognized as income. But if the donor is at least 72 years old, the distribution could also count towards their annual required minimum distributions, or RMD. The benefits of using qualified charitable distributions to make charitable gifts are the donor's adjusted gross income is lowered, and the gifts count as tax-free gifts to the charities. But there are a few restrictions. The maximum annual qualified charitable distribution for an individual is $100,000 and $200,000 for a couple. QCDs cannot be used to fund or support a donor advised fund that Mike just mentioned, nor support private foundations. And the deductible IRA contributions made after 70 and a half will reduce the donor's annual QCD allowances.
Thanks, Yashika. This really, and I do want to point that out for you guys that are considering, making a gift to your charities or St. Margaret Mary. This is a fantastic strategy, and you should be looking at this. Next, we're going to move into a discussion about planning a charitable legacy and estate gifts. So I want to start off by just setting the stage a little bit. There is a new really, in the wake of the pandemic and with the rise of many new challenges affecting the health of our economy, there's a lot of organizations are facing significant uncertainty with regard to the stability of their operating revenue and the sustainability of their programs. More and more, we're seeing not-for-profit agencies and their donors recognize the benefits of endowment building and starting to prioritize their creation and the development of planned giving programs. And the timing of this really couldn't be more perfect. Demographics across the country are shifting drastically as our population ages, and baby boomers have started to retire and transfer their assets. This transfer of wealth is affecting philanthropy and creating opportunities for significant impact in endowment building as people look to be generous and also reduce their tax liability on their transfers. According to a recent study, and this is the slide I have up here, it's from 2020, it was titled The Illinois Transfer of Wealth Opportunity. It's estimated that this decade, $434 billion is going to transfer through Illinois estates, with nearly $53 billion of that passing through DuPage County alone. So just imagine with me for a moment, what good could come from this transfer of wealth if as little as just 5% of it were captured and directed to charitable causes like St. Margaret Mary and your other favorite charities. People often don't realize the incredible power they have to make a difference, particularly when they combine their efforts together through coordinated impact through endowments. So just want to set that stage. And the foundation is really excels in facilitating these types of conversations with you around both outright gifts and planned gifts. And we can work with you and your advisors to craft a plan that meets your needs to support the causes and charities that matter to you. So just wanted you to be aware from that. Yashika, let's move on a little bit and talk about some of the different tactics. How about we start with charitable gifts from a will or trust?
Yes, that's a perfect place to start. Donors can name their favorite charities, including St. Margaret Mary, as a primary, residual, or contingent beneficiary in their will or trust. But a few things to consider if you're in that planning process. We suggest that you be clear about your intentions. How much do you want to give, and to whom, and to what? That leads me to another consideration. Contact the charity that you are including in your will or trust and confirm their legal name and address. Sometimes organizations' names are closely matched, and you want to be sure that your giving goes to the organization you intended to go to. And confirm any minimums for endowed gifts and the feasibility for a gift's desired purpose. And finally, if you'd like to remain anonymous, be sure you share that with your attorney or advisor so that it can be articulated. Remember, you don't have to do this alone. As a local partner, consult with your local community foundation if you're looking to support multiple causes or organizations, you want to provide for the future needs of your community, or if you're looking for a partner to assist you and your loved ones in your philanthropy. Let's talk about including beneficiary designations for your qualified retirement accounts. As with wills and trusts, donors can name charities as their primary or contingent beneficiaries for their qualified retirement accounts. We recommend, again, to be specific when you're stating your intentions. And another beneficial tip here is to consider donating these assets to charities first, and leave other non-qualified assets to your heirs. The charities won't have to pay income taxes for them, and your loved ones should receive a step up in basis on most other assets that they might receive. So, as with the others, you can also support charitable giving with insurance policies. You can designate one or more charities as a primary, partial, or contingent beneficiary on the policy as well. And you can transfer ownership of a paid-up policy to an organization and donate those insurance policy dividends to the organization is also a way to support. Finally, consider naming a charity as a policy's designated owner and beneficiary. While making the annual gifts to the charity in the amount of the annual premium, then the charity utilizes those funds to pay the premium.
All right. So the last thing I want to talk about are retained income gifts. There may be instances when you wish to be generous, but also ensure that you and your families or other loved ones are taken care of and receive a stream of income. In these situations, a retained income gift in the form of either a charitable gift annuity or a charitable remainder trust might make sense. And I'm not going to go very in the weeds on these techniques, but I just want you to know that these opportunities are available and that they'll allow you basically to make an upfront gift now, receive a tax deduction for a portion of your gift, and continue to provide for yourself or your loved ones and favorite charities, with a portion of that income being tax-free and also partially taxable depending on how this is structured. Charitable gift annuities are offered by many larger not-for-profits. They require no upfront cost generally to set up apart from the charitable gift you make, and they do not require the help of an attorney. Charitable trusts, on the other hand, can cost several thousands of dollars and require the help of attorney to set up. Charitable gift annuities and charitable remainder trusts function similarly. Again, with the donor or loved one receives income for a period of years, with the charitable beneficiary then receiving the residual at the end. Charitable lead trusts, which is the last bullet there on the page, essentially flip that format and provide annual income to a charity for a number of years, with the donor or their beneficiaries then receiving the residual that's left at the end, generally with significant tax savings. So that's all we're going to say about that for now. I wanted to really keep this as a brief introduction on charitable strategies, and I so appreciate Yashika taking time to be with me today to assist with this, and we really are appreciative of Bob. At this point, we're going to turn things over to Chaz Belloc, who I believe is on your stewardship committee, and he has some final thoughts. So Chaz, please take it away. Our contact information is up here. I want you to have that. We're going to flash that for a second, and I'll stop sharing my screen and turn things over to Chad. So thank you to Chaz. Thank you again.
Hi, my name is Chaz Belloc. I've been a member of the St. Margaret Mary community for 10 years, and I have been a member of the St. Margaret Mary Stewardship Committee since its inception approximately 5 years ago. The idea of a stewardship committee came about when the Parish Council wanted more emphasis on a subject matter that is referred to as planned giving. The parish had just begun a campaign to encourage electronic donations through the website, but there was no attention to other types of charitable giving that Mike and Yashika have just highlighted. I would like to make a few observations about this. The members of the Stewardship Committee have absolutely no intention of providing estate tax, income tax, or financial planning advice. This is not our purpose. We are available to offer suggestions or concepts to parishioners to consider in their charitable giving plans. We want to encourage our parish members to work directly with their own tax and financial advisors to implement any suggested strategies. The Stewardship Committee should only be viewed as a resource to help parishioners identify and consider alternative gifting strategies and how to possibly implement their plans. For example, if a parishioner wants advice or assistance as to how to make transfers of stocks or bonds via the diocesan guidelines, we can help. If a parishioner wants help in working with their qualified plan administrator to make a qualified charitable donation or a required minimum distribution designation, we can offer assistance in that regard also. In closing, I would like to make two final points. First of all, we want to thank Mike and Yashika of the DuPage Foundation for helping us put this presentation together. It is only through the foundation's generosity and the desire to promote efficient charitable giving throughout the community that we are able to conduct this presentation. Secondly, and most importantly, we want to assure everyone who might avail themselves of the advice or assistance of the Stewardship Committee that they can be rest assured that any information shared with the committee will be held in strictest confidence. This assurance is evidenced by the fact that every member of the committee has signed a confidentiality agreement to preserve and protect any and all information that might become available to them. After listening to this presentation, if you have any questions or comments, or if you would like additional information about charitable giving, please do not hesitate to contact the parish office or any member of the Stewardship Committee in this regard. With that, I would like to thank you for taking your time and giving us your attention to St. Margaret Mary. Thank you very much.